Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day as well as your end of week recap for Friday, February 16th. So, congrats, you made it through the end of this. Really, what I thought this was a really whippy week in terms of price action. Every day it seemed like the market had a little bit of a different personality to it. A lot of what I refer to as macro, just a lot of economics that came out this week, some of which kind of troubling. And we'll kind of, maybe we'll start there on a little bit of a negative note. And then of course I'll review the performance for as we're looking at right now, the for the week, for the day, but also for the week. But yeah, I mean, I think this economics is kind of getting a little bit more complicated. We know right now that the market likes, to some extent, bad news or softer economics, right? I mean, the translation there, of course, means that when you have economics that are not performing as well, like we saw earlier this week with retail sales, what begins to happen there? The first moves that I look at are what the dollar is doing and what interest rates are doing, right? Because overall equities, generally speaking, like a softer dollar and lower interest rates, right? Don't want to see, really higher interest rates. But when you have the data that you had today, which was the PPI coming in, again, higher than expected, kind of confirming what we saw earlier in the week with the CPI report. So now it becomes, okay, well, you've got some bad news. I mean, like the housing numbers were not good. I mean, they were, to me, looked pretty darn bad. So when you've got bad news there, and then you also have bad news, so again, like if it was just the housing starts, like probably you see the dollar fall and so on and so forth. But then you're also hit with higher inflation. So that's, to me, is a is a tough macro environment. And it could be that we're leading up to just a bit of a softer time for the short term. But I'll tell you, I mean, this market has been one of the most interesting markets. I mean, that's really what I love about doing this day in and day out. And obviously, I do a video at the end of the day, just about every day for now. And I have a Substack where, I write about all the themes that are going on and specific charts or areas that, I basically try to find some themes that others are not looking at, right? Because I know what happens to some traders. They get kind of stuck on a group of stocks, right? Kind of like, SMCI and NVIDIA. And then when those names don't work, then they have a tough time, or they have a challenge, getting over those names and looking at some other places of the market. But I get back on track for a minute, but overall, like what's to me, it's so interesting is to have all of these movements going on, during the, in terms of economics, and then seeing what we're seeing in terms of the market. And, I think overall, newer traders, right? And I have nothing against newer traders, because everybody has been there. But I see newer traders all the time asking me, on Twitter for, hey, like, what's your prediction for this? Or, where do you think this stock is going to go? And like, can you tell me what you can predict for this? And like, if you're a newer trader, you've got to get out of that habit, in my opinion, of thinking that somebody knows. Like, the more that you spend time doing this, you're going to find out that really nobody knows what what happens from a day on a day-to-day basis. But that doesn't mean that you can't make money. It's coming to grips with that and understanding, like, having a trading system so that you're basically, you're using some of the signals that you're getting from the market, right, to basically either, increase your risk, cut your risk, right, and then just following a trend versus a level, right, and trying to stay long, names and areas that are really working, that are trending, right, and then cutting them when they're not, right, and that's basically it. I know it, like, in a nutshell, and it does help to have, a system that kind of guides you along the way. But ultimately, you've got to take the, taking the emotion out of the equation, really helps in this, um, this thought about, that for some traders all the time, they have to be right about a situation, right? And that's just not what it is, right? I mean, you're going to be right and you're going to be wrong. Like this week, I had a nice profitable week this week, but I was wrong a bunch of times this week, right? I mean, it's just part of the it's just part of the game, basically, to understand that you're going to be right. And the traders that I look up to, on Twitter, and some of them I don't know, on a personal basis, other than chatting with them on Twitter, which is great that you can do that. But the ones that I think are really good just don't have that big of an ego, right? And are secure with admitting that they really don't know on a day-to-day basis, but they're exploiting their trading system and their ideas, and going from there. But the bigger ego people are the worst people to talk to, because they will, and at the end, cause you pain and misery in your P&L. So anyway, I'll move on. I'll move on from that. But it's the end of the week. Sometimes I get a little bit more off track at the end of the week. Risk disclaimer in front of you: everything that we're going through is for information purposes only, and not giving out any advice or recommendations. But yes, I thought it was a very challenging week, considering that the market seemed to do something a little bit different every day this week. So how did we finish for the week? Well, you had the dollar. Actually went flat. I need to update this. This is from my midday note, but the dollar did not end up going higher today. That was not, an issue. Interest rates and TLT did finish down another 60 basis points. So again, that's going to be a concern. I don't like where TLT finished for the week. Right. I talked about that a lot this week. So, it's kind of a no-no, right? Here's TLT. Right. Here's where it finished for the week. It did close below its value area for the year, so I don't like that. So again, there's going to be things that I like in this market, and there's going to be things that I dislike, and that's one of them that I don't like. The dollar, on the other hand, overall not that. Ooh, we got this over here. We've got this, right? UUP. Let me take this out to the. By the way, thank you. I think it was Alberto who emailed me and said, "Hey, you could do some shortcuts in TradingView," and I appreciate that. Let me just make sure this is adjusted, because UUP had a distribution. But we're basically sitting back here. So I mean, it's nice to see that this didn't go crazy this week. We had one big day of an up day with the US dollar, but other than that, overall not that bad, right? So looking at where we are in the S&P, well, let's talk about the indices just for a second, and then there's a lot of movements going on in sectors right now, which I want to go through with you too. So kind of a bit of a bearish engulfing for the day. Overall, and losing a little bit of this 5-day moving average, maybe this is as double topish. And again, I don't know if that's really a double top. You don't really know if it's a double top until it already starts to confirm and breaks back below here. But, I think, we talk about some of the things that we know versus things that we don't know, right? We're always dealing with an uncertain market every day. Uncertainty. But we do know that the seasonality is weaker for the second half of February, and that the VIX is really low still. The VIX is 14, right? So as I put out every weekend for members, I put out a let's see if I can find this for you, and then we'll go over the performance for the week. But I put out like a weekend video as well as a watch list. And I put kind of my bottom line for the week, and I said, here's something that we know, right? This was last week on Sunday. The VIX was a little bit less than 13, so I said, shouldn't we take advantage of this by buying a little bit of portfolio protection? Right? We talked about that in our Q&A session today, and came up with a couple ideas for the end of the month in terms of hedging your portfolio and providing a little bit of downside protection. And the other thing, of course, you could always do is just reduce overall exposure. But yeah, so that's kind of going to be my thought for coming into this week too. But so here's where we are, S&P, and we could come back and we're still above, right around the 5-day moving average. We can come down to the 20-day moving average, right? We could also kind of look at how this value area is going to how we're looking here. We did not stay above the value area for the week. We kind of came back today to the scene of the crime, like of where we were early in the week. So overall, we really didn't do too much, even though day to day it was different. Now Qs, now here's where it gets a little bit more interesting, and let's go back to the daily chart here for the Qs. But you know, a little bit more weakness, right? Not something that we've seen. But I would remind you about how this has shaped up a couple times, you know, over the last few months. For instance, right in the beginning of the year, there was weakness in the Qs and things kind of came back in. And notice what happened, right? After you had about a week of weakness in the right to start the beginning of the year, right? At the end of December, beginning of the year, right? That was bought up. So you know, I would be okay with a little bit more weakness in the Qs. It would kind of just get a lot of the bullish sentiment out of the way. So when you're positioned correctly, or you know, you're okay with the market kind of taking a rest, right? And chilling out a little bit. And that's kind of where I am, you know, right now. And then IWM, which actually outperformed for the week. The phrase that I came up with this week for IWM was, you know, oh, geez, I may have forgotten what it was already. So apparently it wasn't that catchy, but it's just big ranges on a day-to-day basis in an overall, you know, sideways range. So I got to come up with something maybe a little bit more catchier than that. But here's what I mean. It's just it's been so sideways, right? Maybe it's the fact that it hasn't turned right back down and it's hanging around, and maybe we'll see some outperformance from IWM. Also IWC, which is microcaps, right? Just to kind of give you a glimpse at these, right? You know, also kind of hanging above the value area for the year, right? So that's a good thing. If you're above the value area, that means you're trending, you're basically trending in the right, or you're uptrending, right? Even though this still looks overall sideways to me, right? And mid caps too. I was looking at these yesterday. You know, mid caps don't look bad. They're showing a little bit of outperformance. Here's the weekly bar for MDY. This is the mid cap ETF, right? And that's not bad at either, you know, at all to me either. Again, here's what Qs look like, just to give you, you know, now that we have a full weekly bar. Yeah, I mean, it could be that we kind of settle in a little bit, you know, and even if we came all the way back in here, right, I still think that would be kind of constructive for the long term. You know, another thing, I'm really trying to kind of just insert some things that might help traders, but you know, I think overall everybody seems to really want things right away, right? In this world that we live in, like immediate gratification. So if you could develop a little bit of, or if you have a little bit of patience, right? That's what everybody needs to work on that, right? You have an edge, I think, in front of most traders who are constantly looking for, you know, something to happen that day for them, right? Or, you know, but we also talked about some strategy too for the rest of February, that it's kind of more of like hitting singles, you know, and making sure, like, not taking big risks towards for this last couple of weeks of February. So that's also something to keep in mind, right? You know, keep it, if you get some base hits, right, take advantage of those, put the money in your pocket and try to just churn out, you know, small positive days in this type of market. But you never know what you're going to get too. So you know, that could be the mindset that you have coming in, but of course, you know, you want to trade the market in front of you. Other areas that I think are, you know, one of the areas that I continue to talk about, which gets very little attention. I heard them talking about it on CNBC yesterday, and I almost fell off my chair. But Chris Verone was on CNBC yesterday, and I think he's one of the best out there in terms of technical traders. And he was mentioning that the strength in utilities, not utilities, industrials, right? And I agree. You know, every day, one of the things that I tend to look at, right, is you know, I put this out for members, you know, every day, is the 4-week new lows versus new highs in the S&P, you know, whether they're expanding, you know, and today there was just a smaller number both for the 4-week lows as well as the 4-week highs. But, I've noticed this now for about 3 weeks, I would say, that this group is just showing a lot more strength than anything else. And it's not exciting names. Like it's not it's not the SMCI and NVIDIA, but it's Eaton, right? It's CMI, that's Cummins, RSG, a couple of the names like RSG. Dover had good earnings. GE just continues to quietly go higher and higher, doesn't get any attention. There's a few other names. Dover also had good earnings. We were looking at the chart of Emerson today, right? Look at this chart from like a long-term, technical pattern, right, on the weekly. It was beautiful, right? Coming out of this range like this, big cup pattern like this and resolving higher. So, that's where you've got the strength right now in this market. So, we could talk a little bit about what happened with SMCI because it is a phenomenally interesting story. And again, going back to how I started this video, talking about how interesting this market is, finally, it does feel like a blow off top to me in SMCI. I mean, I had a couple of people ask me, where would you get involved in this name? Well, you can't like I don't want to say you can't do anything because I'm not giving it advice, but the momentum, you want to ride the trend or ride a name when there's huge momentum. Once the momentum comes out of the stock, you got to get out of the way. Because that's a parabolic move. And you could go back, and I'm not going to review every chart for you, but people always ask, like, oh, was there a similar situation? Yeah, look at the charts, the chart of what happened with GameStop. Look at what happened with AMC. Look at what happened with Tillery, right? So there's plenty of other examples of stocks going parabolic, and then follow along what happened before. I like this example. I know I saw some people talking about this. Oh, I may not have it up anymore. Oh no, I don't have the chart up anymore. I was talking about Qualcomm, or I was going to talk about Qualcomm back in the day. I don't think it'll take me that long to bring up the chart. I just have to configure it appropriately. But we could go back and we could look at a weekly chart, basically. And I'll just have to scroll and scroll. But this is when I started my career, right? So, look at this parabolic move, here was Qualcomm, $3 stock in the beginning of 1999, going all the way up to $60. I think this is split adjusted, but what happened here was there was a broker who put out like I forget the exact price target, but again, this was when Qualcomm was trading at like $200 or $300. I believe I'm going to get this wrong because I'm going from memory. And somebody came out with like $1,000 price target on it, and the stock went bananas. But they did that price target like right at the tippy top, right? And it went up like one more day, and then you could kind of see what happened, right? So notice like, and again, I'm not making any predictions about what SMCI does, but and this is where I was making fun of people the other day who were comparing, who always like do this like clickbait type stuff on Twitter where they compare, for a while there was a guy on Twitter who was comparing the market to 2008, and he was overlaying like the analog chart. I was like, dude, what is wrong with you? And I try to tell him that, and of course he ignored me because who knows, he probably just wants clicks. But I'm like, dude, that was the financial crisis. We don't have we don't have a massive leveraged financial crisis right now, right? There's reasons for every time that there's a major fall in the market. They're different reasons, right? And then the same guy did he realized 2008 didn't work. Then he was like, okay, it's 1987. Right. And like, so he did this for 6 months where he said, okay, it's not that year, it's this year. I'm like, dude, just like, stop. This is horrible analysis. You're really hurting people by doing that type of thing. But I get it. Your followers are going up because people love the drama, right? So the latest thing was like comparing 1999. We're not in 1999 either. However, there are things that rhyme, and there are lessons like these that you could learn from. So again, I'm going off tangent in this end of day video, but there are situations like that, and they're going to be a little bit different every time. But, notice what happened here. You had to move down, you had a second effort, and then you kind of moved down. Am I saying that's going to happen with SMCI? I don't know, but for now, the momentum is gone. And it's got to regroup. And, could I see this going down to $600? Sure. Because where was it a month ago? It was at $300. So, put things in perspective, and realize that this has been a huge, even with it down 20% today, right? It still has gone up tremendously from this breakout around like $300, right? And Nvidia, we could look at this chart too, was down today, didn't go down as much. I think, it's going to be very interesting with that earnings. But like, if you're a big fan of this company, don't you want it to come down a little bit? I think, if it comes down to say and fills this gap in here at 600, that might be a better opportunity. And then we'll have to build again. But that's the beauty of some of these plays, and that's how I've played Nvidia. I've traded this. It was one of my biggest winners last year. And then when it went sideways, I kind of backed off from it for a while, right? And then I went long. I didn't make, in my trading account, I didn't play it all the way up, but I did catch it for, it was one of my biggest winners, over the last month, but I really shied away from it a little bit. It was just went too parabolic for me. But in any event, so where do I want to go? Let me conclude a little bit with just going over the performance for the week. So I'm a little bit all over the place in this video. So thank you for bearing with me. But so this was somewhat surprising to me, right? To look at this performance for the week. So certainly, Bitcoin was huge this week. The IBIT ETF, that's the one that I'm using for the ETF, was up 9.1%. The China names were strong this week. They were up 4.5%. I was looking at the Hang Seng earlier this morning, right, which was closed a few days this week, and the Shanghai was closed all week. Just back to the finally closed back above the 50-day moving average. Has this bottomed? I don't know. I won't get involved in China for a bit. I don't get involved in names that are in downtrends. Right? I don't have to pick the bottom of stocks. But we'll see. Maybe it begins to kind of outperform, some other areas of the market. We'll see. I'll do more examination over the weekend. Also, energy names. I actually, for a while, have kind of looked at energy and said, I don't know. But for a trade, I don't know if the trend really changes, but you can go long, and that's what I did yesterday versus the top of value, and I'll be targeting 87.53 in the XLE ETF. All right, this is could be a short-term trade for me. And other areas of the market that did well. So if you notice, value outperformed this week. A rare week of VTV up 0.8 of a percentage point versus VUG down 1.3%. As I mentioned, small caps outperformed. Materials did really well. This is one of the biggest weights in the materials. This is Lind. I like this chart. It had a little bit, it had a little bit of a shakeout here and started to move higher, right? Not the best close for today, but I think the materials might get a little bit of traction here. Certainly that was, so you kind of got a 2-day outperformance because yesterday steel names did very well yesterday too. The banks were still up today too. I'm sorry, not today, but this is the week's performance. And even solar was up this week. On the right side, some things changed here a little bit. Tech was down 2.5%. Actually, the semis were down 1% for the week. I thought that was interesting. And also the home builders lagged a little bit, right? We got those pretty nasty home numbers. So that's it. I'll kind of conclude the most of the video here. I'm just going to remind you of a couple things. I think it's a great time to take advantage of the MarketWebs. This is a trial. We don't do a lot of trials. But I've mentioned this a couple times this week. Here's where you can go and get involved. It's marketwebs.com, and you can get your free trial. You get like a whole guide with this. You also get the webinar that we did all the way back on Monday, which feels like a very long time ago. And you can kind of listen to myself and my colleague Webb Begol, who really gave a great history of the MarketWebs, how he developed them, and how I've really been using them over the years. So it's a great trading system, and I think it really helps to have that in your back pocket, especially navigate times like this. And then the other thing I would say is, if you have already signed up for the trial. What I would do as well is, sign up for the Substack, because, I go over every day examples, of what I'm looking for, and, different things. Um, momentum plays like a app lovin', which I established today. Also Robinhood, maybe we'll end it with Robinhood. I like this as a long-term play. Long-term swings. My swing trades are usually anywhere from like a few days to a couple weeks, a few of them longer if I really like the trend. But I have to say, I really like the trend in this Robinhood. Let me just squeeze this chart down a little bit. But again, I know that there's a lot of emotions about when I bring this name up. Some people are like, it immediately gives them, they get very upset when you mention Robinhood if they had a bad experience. I get it, but if you cover up the symbol, I have to say this is a pretty darn good looking chart with the base and a breakout of the base over here, breakout of the nice check back to the top of the 2024 value area, and a move higher. So I'll leave you with that chart. Guys, have a great weekend, nice long weekend. And you could expect, if you're a member of Tribeca Trade Group, I will come up with a new watch list probably on Monday. Watch lists are pretty good. I really started with a pretty slim watch list, more than I normally do. If you notice, I have a good number of names, but I add names as we go along. And we had some really good performers on here. All right, guys, have a great weekend. See ya on Tuesday.